So I recently read a report that the average credit card holder has $7,300 in credit card debt. Not only that, 1 in every 2 credit card holders carries a month-to-month balance. So if this sounds like you, stay tuned. Over the last couple of years, inflation has just been out of control. I know you've been feeling it, I've been feeling it. Gas is high, food is high, airplane tickets is high. It's expensive to breathe out here. These banks have been making so much money off of credit card holders, and that's why credit card debt has literally just skyrocketed over the last couple of years. The average credit card interest rate is now 21%. And to put that into context, usually we see interest rates before around 14%, 15%, 16, 17, but now the average is 21%. And I've even seen it on the credit cards that I use. And that is absolutely ridiculous. And what 21% APR means is that the bank is actually charging you 21% of the balance that you are holding on the credit card month to month. They're charging you that on an annual basis. So I now want to dive into 2 really effective methods on how you can actually get out of credit card debt, y'all. And I want you to do this, pay attention, and never get back to this point. So let's talk about the first strategy that you can use to pay off your debt. This strategy is called the Snowball Method. I love this method because it allows you to have psychological quick wins when you're trying to tackle this debt, right? Now there's like 5 steps to the Snowball Method that I want to explain to you, okay? So step number 1, you need to make a budget, right? And the main goal of making this budget is for you to get a really clear understanding of how much money you're bringing in every month, how much money your expenses are every month. And in this particular case, when it comes to your credit cards, it's important for you to understand how much credit card debt you owe. And not just in its entirety, you want to know how much credit card debt you owe on each credit card. All right, so step number 1 is make that budget. Step number 2, you want to lay out all of your credit cards and you want to list your debt on each of the credit cards from smallest to largest, okay? You also want to list the minimum balance that is owed for each credit card to keep you, from getting late payments, because we don't want to damage your credit and we still want to make some progress towards paying off the debt, right? So list those balances and then list the minimum payment. And you want to strategically and intentionally set up those credit cards from smallest to largest. All right, so step number 3, let's execute. Let's put this Snowball Method into action. You are going to hyper focus on the credit card that has the lowest balance, right? You're gonna set that aside. Now that you know what the minimum balance is on all the rest of these credit cards, you are now going to set up payments for those so that you can, again, progressing forward towards paying them off. But also make sure that you are not negatively affecting your credit by having late payments, okay? Since you've already created a balance, you have a good understanding of how much excess cash you can spend on going towards this credit card with the smallest balance. Because you're not just gonna pay the smallest, the minimum balance on this one, you're actually gonna focus on paying way more than the minimum balance so that you can pay this credit card off first. So step number 4, you're gonna continue to pay these credit cards off. You're gonna pay this credit card off with the smallest balance. And yay, you finally do it. You pay off a credit card, you feel really good. You can set that credit card to the side. And this is why the Snowball Method is effective, is because you get this quick win. Now that you have that credit card out the way, now you're gonna move and focus on the credit card that is next in line with the second smallest debt amount, right? And now you're gonna do the same thing. So you have excess cash that's gonna go towards paying off this credit card, way more than the minimum balance. You've got the money that you were spending on this credit card that you just paid off. You can now apply that to this credit card, and then you're gonna focus on this one and continue to pay the minimum balance on the other credit cards. And you are going to continue to do this until you pay off each of these credit cards. Now let's talk about another method that is also really effective. I'll call this the balance transfer method. And how the balance transfer method works is you are going to find another credit card that has an APR, annual percentage rate, of 0%. And it needs to have an annual percentage rate of 0% on balance transfers. So that's really the key point, in getting an additional credit card, because what you are going to want to do is take the balances from all of your other credit cards and you're going to transfer that balance over to a new credit card that has a 0% interest rate for a specific period of time. It's going to allow you to pay your credit card in one lump sum. It's also just going to allow you to pay your credit card without having to pay interest, right? And so you want to be able to transfer those balances over for free, essentially, which is why it's called a 0% APR balance transfer credit card. I highly suggest that you go to nerdwallet.com. It's a really great website, and I am not sponsored by them, but I've used them so many times. It's a really great website for you to refer to get a clear understanding of what those credit cards are that you can use, and some of those credit cards that may actually apply to your lifestyle. But again, you want to make sure it's a 0% APR credit card for balance transfers. I really want to make one point clear, because I think this can be really confusing and people might think that it's just easier to pay a credit card off with another credit card that has 0% interest. It's totally different. It is not the same, and I'm going to tell you why. When you take a credit card and you pay another balance off on another credit card, it's actually considered what we call a cash advance, right? And cash advances are very, very expensive. And I don't think I've ever seen a credit card that has a cash advance that's free. And there are many credit cards out there that have a transfer balance option that's free. And that is exactly what you want to focus on. So we are trying to build wealth here. I want to make sure that you are vigilant in your journey towards building wealth, getting out of debt. We gonna let these banks make all of their money off of other people, but we don't want the banks to make money off of us. They really prey and depend on people not knowing APRs, not knowing these terms, not understanding how interest rates work, because that's how they make their billions of dollars. And I just don't want you to be part of that. I know I ain't about to be part of that. So I'm really hoping that this information was helpful for you. If you have any questions, feel free to drop them down in the comments. If you felt like this information was helpful, if you learned anything from this video, drop it down below. I would love to hear it. And if you feel like you're going to use any of these tips, go ahead and drop that information down in the comments below as well. And last but certainly not least, if you have anything that you want me to talk about as it relates to personal finance, go ahead and drop that down in the video. It's truly one of my passions, and I'm so excited that I have you on this journey with me and that I can be on this journey with you to help get us closer to building generational wealth. I will see y'all soon. Bye.